The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when lone fishermen in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 7th, fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call only one thing is more important than learning from experience, and that is not learning from experience. You know, today can be filled with opportunities for you to express yourself, expand yourself, and experience the world around you. You know, a lot of people talk about life, but at TFNN, we live it, and we love it. Now, as tigers and tigresses, we realize that life can be what we make it, simply because we have learned from our past experiences. You see, the way it works is that lessons learned from our experiences help us to see all the possibilities in the game of life. When we've been there and we've done that, well, we have the experience to know where we want to go, and just as well, where we do not want to go. Experience is an extraordinary teacher. You know, there's a great Chinese proverb, goes like this. It says, those who play the game do not see as clearly as those who watch. Something to think about. Well, here's the deal. While you're in the game of life, it's a great idea to step back and take a look at what's really going on, or even seek outside opinions from those who are watching you play the game of life. Gather their input, folks. See, here's the key. All that you really want to do each and every day is work on making a better performance than you did the day before, than your last performance. Boy, if you can do that, just imagine all the tiny steps and all the progress that one can make. That is my outcome each and every day. So I'll do a better job than I certainly did yesterday. I wasn't with you, and I do want to say thank you to David and to Basil for filling in for me. We'll talk about all that next week as far as what happened and the solutions that I will have come up with to try to avoid that in the future. Here's the thing. We always want to expand. We always want to improve, and we want to build on our experiences. And if we do that, we will emerge as a winner in more ways than one. Yes, folks, there is only one thing more important than learning from experience, and that is not learning from experience. Well, let's go check out the experiences of the markets here. Right now, we've got the Dow futures up 58 points. They're trading out at 15,607. ES Mini up 9 points, trading at 1775. NASDAQ up 23 points, trading at 3510. King Dollar back about 4 cents, trading out at 80.97. The dollar, let's see here. I'm just looking at the currency market. How about the hard currencies? We've seen a bit of a roller coaster after the jobs report was released at 8:30. Right now, gold is almost flat, unchanged. It's up $2, no big deal. Well, it actually is kind of a big deal. It's trading at 12.59. Maybe we'll touch on that. Silver is down 8 pennies. It's trading at 19.85. Late sweet crude totally flat, trade at 97.85. A quick peek across the globe. It's green arrows across the board. The DAX up 40 points, about 0.5%. FTSE up 22 points, 0.3%. Over in Asia last night, the Nikkei up 307 points, 2%. Of course, thank you to the good handoff that we gave to Asia. The Hang Seng up 230 points. 213 points. That was up 1 full percentage point. Our call number, 877-927-6648. If you give us a call, be happy to take a look at your stock chart, answer any question I possibly can. Boy, you talk about technical problems over the last couple of days. I'm hoping that the third time is not the charm, but as soon as this show is done, full backups being done on all my computer systems, phones, the whole kit and caboodle out there. In any event, that's not what you tuned in to listen to. We're going to start by taking a look at the euro, Japanese yen. I know that you want to know, where is this market going? Why is it going there? What's going on? Well, in order to really answer that question, we really must take a look at the currency pair. And, of course, my favorite currency pair, and yours as well, it is that euro, Japanese yen. And why? Because our markets follow that currency pair. That is the carry trade that is out there, so we just need to be paying attention to it and watching until it stops working, and right now it works. So we're looking at the euro, Japanese yen, and just like the market after the release of the jobs numbers, it poinged up and down. Right now, we're looking at a 120-minute chart for the euro, Japanese yen. So if we take a look at the last significant leg, the last significant intersection for swing points out here, where you see the largest change in trend inside the euro, Japanese yen, you'd come all the way back to about the 1 o'clock or so time frame on November the 7th. That's what we're looking at on our screen, priced at around about the 131.87 level. The euro travels in a rising price channel, makes a move all the way up to the high that was put in at about 145.67 is the price point around 7 o'clock in the morning. Doing that on December 27th out there. Makes a high, pulls back. Where was the retracement as the market was pulling back? What was the euro doing? It was pulling back. It found support at the 0.618 retracement level of that move. Now, we saw the euro, Japanese yen break through that consolidation. If we take a look at it, it broke through the consolidation back here at 9 o'clock in the morning on January 2nd out there. Boy, was that a big clue as to a top that was inside the market? I think so. If we take a look at the euro, Japanese yen, it then began traveling in a descending price channel, which it did break through. Now, when price is moving lower and you break to the downside, that's not really, it's already traveling lower. It just means you might have to go back and take a look at your channel lines out there. But you can't have a breakout when it's already breaking out in the direction that it's broken. I don't know if that made any sense, but hopefully it does, and it does if you're watching us on TigerTV. Nonetheless, what did the euro, Japanese yen do on that 120-minute chart? It got down to that 136.67 level. That is the 0.618 retracement. Now, I just maintained and left those channel lines in place because the real key is what happens on tests of that channel. Was it really a false move to the downside? Couldn't be a break. Was it a false move? And what we've seen here is the answer is yes. In fact, if we take a look at this right here at about 11 o'clock, this is on February 6th. This is yesterday, as the markets took off. What took place with regard to the euro, Japanese yen? Guess what? Got back inside the rising price channel. Did it? It got to, on the 120-minute chart, it got in that extreme overbought condition, just like our markets did yesterday. But this will push higher. And where is this going to push higher into? Most likely it's going to push higher right into the top of that descending price channel out there. That's at which point where we're going to have to be paying attention to that's where we're likely to see that the bounce is over. And I say likely to see that the bounce is over because it could break topside there. And that's what we've got to pay attention to. We just want to pay attention to signals in the market. Now, if we take a look at this last leg down inside, just to get an idea where the euro, Japanese yen has traveled to, we come from the swing point out here about 3 a.m., January 29th, right at the level of 141.23, all the way down to the low that was put in here at 3 o'clock in the morning, and that was on February 4th out there. And that's at a low of 136.22. What we'll see here right now is what the euro, Japanese yen needs to do to prove that it wants to get up to the top of that descending price channel. It must break the 0.618 retracement level. So that's its hurdle for the day, 139.32. In essence, it's already hit that. It's done that during the intra-session from 8:30 to 9 a.m. as it got up to a price point out here of 139.21 versus 139.32. That's close enough for me in my work. What we're watching for is we're watching for a move above that high, above the 139.21. We get above 139.21, 139.32, price will run to the 140 area. It doesn't have to be today. Had a big bounce yesterday. Obviously, I think it was the Dow's best day of the year thus far out here. Big bounce. You expect those, or you should expect bounces inside of markets, especially as rubber bands get stretched. My clients and I, we actually went long the Dow on Wednesday afternoon. Wednesday afternoon at 2 p.m., we got a Rhodes momentum indicator buy signal. We took it, and we experienced that nice bounce yesterday. We've adjusted our stops accordingly. We'll take a look at adjusting it even further here this morning because this market, as you saw during that 8:30 session, it can and it will do anything. But right now, Euro-Japanese yen pointing to the fact that it wants higher price. It makes sense for it to go make that 0.786 retracement, for it to then give us information about what this bounce wants to do. If it wants to then turn around, make a beeline, make that C point of the A to B equals CD down, and we'll know what happens as the Euro-Japanese yen travels to that area. So that's the most, in my opinion, if you can get your head wrapped around this chart, here's where the signals will come from. Now, they may come a little early because this currency pair leads the market out here, but that's where I've just given you the biggest bone, the biggest prize that I could possibly think of. So out there, you don't have to trade the currency pairs. I'm not asking you to trade the currency pairs, but I am asking you to utilize the tools that will help you in your trading. Now let's go take a look at the futures markets out here. What do we have inside the futures market? Well, if we take a look at the NASDAQ futures, this is kind of interesting out here. I was drawing the rising price channel, and this is coming off of, now, when we were on the air last, we saw that the NASDAQ futures had pushed lower. This was into Wednesday, and as they were doing that, they got down to a price level of 34.12. As they did that here, they were making a nice 1.272 butterfly pattern out there. Of course, as it was pushing lower during that trading session, which was 12 noon on my time frame. Of course, I'm only on from 9 to 11 most days when my system is working properly. I said we'd really have to wait until Basil's show was over to understand just what was going on inside that currency pair, and not currency pair, but the futures market. But boy, it hit that 1.27. How does it work like that? It hit that 1.272 expansion. And boy, did it move higher from that stage. At this stage here, we're seeing this little rising price channel. We see that price now hit the top of that area, which is 35.18. The top of the price channel right now is so-so with regard to the way that it's drawn in here. The bottom is important. The bottom of that price channel, and if that's really what I'm focused on, and take a look at what happened. Now, the price channel here was, in essence, began forming during that trading session at 12 noon. So that says that open at 34.38.25. That's your touch point. Your next touch point that you can use here is at 6 a.m. on yesterday morning, and that was out at 34.53. Take a look at how price just came down and hit that, and then boinged up. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now we've got the Dow futures up 62, S&P up 11 points. Let's continue to check in on the markets out here. So as we take a look at the let's take a look at the ES Mini out here. We'll take a look at the 120-minute charts that we've got on our screen. So just like we were taking a look at the descending price channel out here inside of the Euro-Japanese yen, if we take a look at the S&P 500, it too had formed a very nice descending price channel out here. Your first touch point is really going to be the midnight time frame on January 23rd out here, and that was the open of 1836. That's your price point. Your next touch point out here that I would use is this bar. If you're watching us on Tiger TV, I'm hovering right over the 4 p.m. close on January 31st, and that is, I'm sorry, not the close, the open during that 4 p.m. session, and that was out at 1785.75. What we can see here with regard to the ES Mini and the 120-minute chart, it broke through there at 10 o'clock in the morning. That was yesterday. That was a nice little confirmation for my clients and myself who went long. Now, we went long the Dow, actually, versus going long the Qs. So it was kind of a little bit of a toss-up, but it was really the Dow futures that actually gave the turnaround signal. It gave the turnaround signal before the Qs did. The ES Mini was kind of neck and neck in the race there. And my selection was, we could get a really large bounce in the Dow. Now, yesterday, it kept pace with the market as one of the leading indexes that bounced out there. We'll see what we can get out of it. I'm going to go ahead. In fact, if you are a client of mine and you're listening, I sent out a Twitter alert a few moments ago. During this next break, I'll get the email alert out, and so that's on the UDOW trade. And let's go ahead and raise our stop to 92.99 on that. Let's say, I can't control what the markets are going to do here, only what we do with regard to our trade. And here's where I'm going with that for those subscribers of mine that are listening out here. And folks, what the heck happened there? Refresh here. I don't know what happened there. Maybe I was using a 10-minute chart. It's probably a 10-minute chart that I had on my screen. And, folks, if you haven't had a chance to test drive Mastering Probability, and I got a lot of questions from folks from when I was on the prior day because I had mentioned some numbers and so forth, and we'll go through that during one of the segments out here. All I'm doing to come up with that 92.99 area here is I'm just using the swing point low coming into that 4 o'clock close from February 5th out there. That's out at 90.79. So I'm going from that 90.79 all the way to the high that was put up here at yesterday's close. That was at the 94.42. You can see the 0.382 retracement here. 93.03. Probably shouldn't come into play with futures being up. We shouldn't be in any trouble out here if the market's going to reverse. Let's just take that nice, 2% profit, 2.5% profit, whatever it nets out to in one day, and just let the market do what it's going to do out here. So I'm just using 92.99, just tucking it a little bit below that 0.382 retracement out there. So if you are a client of mine and you are in that UDOW trade out here, just sometimes I got to just do this live on the air. Go ahead and adjust your stop out there, and we'll just let the market do its thing. Now, as with regard to where the ES Mini can travel to out here, right now it's taking on where we saw that little last waterfall cascade as the top of that the descending price channel was being hit at the 10 o'clock time frame on February 3rd. So anything can happen, right? That was at a price point of $17.82 out here. If we do take a look at the 30-minute charts, I'm going to switch over to the 30-minute chart here right now. Real key to this market continuing to move higher is, in fact, for the ES Mini to stay above that 1773.50 level. You're at 1778 right now. This thing gets back below that 1773.50 area out here, and we can see a little bit deeper retracement. So that's why we're just simply adjusting our stops. We just simply let the market, and we've got an exit on this as well, folks. So we've got the where we're going to. We got both sides. We have an exit strategy, and that's what you need to have every time you trade. You need to have an exit strategy on both sides of the trade. Let the market go ahead and do its thing out there, because that's when you're most objective, when you're setting up the trade. Just let it do its thing. You can always come back in, take a look at a trade, whatever it might be. Now, I mentioned Goldilocks out here. Gold is back about 80 cents right now. If we go see what gold has done here today, that thing had shot up nicely. And let's see here. Where's the gold chart? If we take a look at gold, gold is broken through this, both the descending trend line out here on the daily charts that I'm using, through the price channel, but all it's doing is just moving sideways out here. The good news is, the good news is it hasn't broken down, but it is not exactly, it's not exactly blowing my skirt up here. Of course, I don't wear a skirt, but in any event, don't really know what to make of gold here, just moving sideways. Something to think about. In any event, we'll be right back. The Dow's up 73, S&P is up 12 points. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 39 points, trading out at 15,667. S&P up 8 at 1781. Composite up 23 points, trading out at 4080. Russell 2000 up 5, trading at 1108. Apple up $7.50, leading the charge to the upside. Expedia Inc. Expedia Inc. just nosed them out, up $8. That's up 12 points. Outer Wall, OUTR, up 11% this morning, up $7.50. Google up $4. TripAdvisor up $5.30. Concho Resources up $4.76. Aaron's, I suppose that's the rent-to-own place, up 14%, up $4. To the downside, LinkedIn getting unlinked here this morning, down $15, down 7%. Cigna Corp up 8%, off $6.50. You've got VeriSign, VRSN, off 7.5%. You've got Genpact Limited, ticker symbol G, down 19% here this morning. Wyndham Worldwide, WYN, off 4%. Fairway Group Holdings off 28% here this morning, down $3 and change. Or call number 877-927-6648. Back to that Euro-Japanese yen chart. If we take a look at the daily out here, what we're looking for is a break for the of this little the price channel here. Now, this is a daily chart that we're looking at inside of the Euro-Japanese yen. That little red diagonal line going across my screen out here, that's a little bit longer. We're looking at channel lines, I believe, inside the 120. I know we were the 120-minute chart of the Euro-Japanese yen. Here, you always want to make sure you're taking a step up and a step down, taking a look at what's going on all around you. And as we take a look at the daily chart, you can see that, which has more relevance, quite frankly, than the 120-minute chart. We can see here the euro is right up against, it's trying to break this descending price channel out here. So where it closes today is very important, especially with our markets being closed on Monday out here. Had a request to go take a look at high-ho silver. So let's go do that. We've got silver right now trading out at $19.84, off about 8 pennies out here. Silver been traveling in a sideways consolidation range out here. Nothing really changed there. It's running into the trend line out here. Really a trend primarily established, short-term trend line, primarily established by the high on August the 28th out there, and that was at a price level of 25.12, and then you've got a high out here on October the 30th out at 23.09 out there. And so as we take a look at that, now, traveling sideways, I mentioned this in my newsletter this morning, and, I can't use the skirt example because I've already used that here, but it does not excite me. Breaking a trend line is one thing, but you got to break a trend line or a channel line with conviction out there. Breaking it by moving sideways is a yawner. So what will transpire here, what we'll really be paying attention to if silver continues this move sideways out here, is just watching for which way it breaks the consolidation. The only way to really play silver that I can see at this stage here, especially if you were to, is to really play the consolidation. That means you are selling it at the top around $20.50. You're buying it at the bottom around $19 and change out there. And that is the only way that I can see that you could actually play silver out there. Now, I had some questions because I had some technical difficulties. My system froze a couple of days ago, which was unrelated to the problem that I had yesterday. And when my system froze, that meant I had to go into backup mode and just start jabbering and talking. And so I got lots of emails from folks, and a lot of folks in the den said, hey, it was just fine. And some people said, hey, I didn't even realize that you were having much in the way of problems out there. So that was pretty cool to know that, because I can trust you that all that I was having was problems in the background here. Now, I talked about the Rhodes Momentum Indicator System. I'm always talking about the limiting risk out here, that what you should really learn, the whole key to trading. The whole key to trading, this is the secret, this is the Rubik's Cube formula, is to never risk more than 1%. And a lot of people, they can't figure out, I get emails from folks all the time, they're saying, how can you make money? How can you make any money if all you risk is 1% out there? That's where I really want you to understand that. Look, this is through yesterday's close. So this is after I developed the Rhodes Momentum Indicator System. That's all that we have been trading since August the 8th out here. So this is through yesterday. It doesn't include the additional gains that we're experiencing right now in going long the Dow. So that is the trade out there. And if I were to take, and we have open trades, so when I was giving you information with regard to what we have been able to accomplish thus far, it didn't include some of the open trades. So we've got, for example, forget the UDOW trade, but we've got two other trades out there. One's up 52%, one's up 21%. In the market, and then obviously we've got the Dow long trade that we took out there. If you just take a look at every single trade, which is now 55 of them out here, by only risking 1% or less, our actual results on a $100,000 account out there, so you can take this out, and figure it out on your account, whatever your account size, is a 21% return. 21% return, folks, since August the 8th out there. Most folks would just be happy to just simply stop right there and say, yeah, I'll take 21% for the year. This is 21% since August the 8th out there. Now, in that same time frame through yesterday, when we began the trade here, the S&P had closed at 1690, and on February 6th out here, yesterday, it closed at 1773. So you had an 82-point gain out there. 82-point gain. That's about a 5% move in the market out here. Mastering probabilities was a 21% gain in that same time frame. So about a 350% increase. So look, folks, and I'll provide all the detail. Here's all my trades out here. I really want to be able to teach you how to trade. If you've never experienced mastering probability before, the newsletter service, go do it, because it also includes a 90-minute workshop on the money management piece. So you'll truly understand what risking 1% is really, really all about out there. Oh, so maybe I misspoke. The market's not closed on Monday. My apology for that. I apologize for that out there. So sorry to have potentially have misled somebody out there. Thanks. We got all these tigers here watching our backs. Life is good. Anyway, let's go check out let's go see what else is moving here in the marketplace. Now, here's real key. Let me put up part of the Rhodes Momentum Indicator. We're going to take a look at the daily chart out here because these are some key levels that I'm paying attention to on the daily charts. Where's my daily chart? Here we go. Here's the daily chart. Now, here's the Dow futures. Hey, we're not out of the woods here. Dow futures right now are trading at 15,650 out here. For me, the real key level is what's going to happen at the 15,000, where's the high out here? 15,000, let me see here. It's the high of this trading session here from February 3rd. And that's a real key level for me. That's 15,697 out there. So it's another 40 points or so in the marketplace. So that's a key level for me on the Dow. On the ES Mini, a key level to keep this bounce here going nicely. The bounce on the daily for the ES Mini that I'm looking at, that level, and we're right at it, looks like right now. That's going to be the high here of 1783.75. We're at 1783.50 right now. We close above that level. This bounce here is going to have some nice legs, nice enough legs for everybody out in the media to say, guess what? The correction is over, and the euphoria will begin again, and that's where the rug will just get pulled out from underneath everybody. Now, we'll just simply trade this one day at a time. We'll look for signals. We know what it is that we're paying attention to, but right now, the S&P, the ES Mini, is really trading up an important level of resistance, and I want to see it close today out here above 1783.75 out there. With regard to the NASDAQ futures, let me go see what the NASDAQ futures here are doing, what the NQ is doing. That level, I'll give that to you as well. It has not been able to hit that area, and that's going to be this candle session, also from February 3rd. That high out there is 35.29.75. So those are going to be the key areas to be watching inside of the market, at least as far as I am concerned. Let's go take a look at some of these equities here that are popping and dropping. Let's take a look at, Priceline's up nice, $30 there. Certainly got Athena Health, that's up 17%. Let's go see. I think that has been making huge A to B equals CD patterns. Give me a moment here to just switch over to a different chart. They were out with some earnings yesterday. ATHN, they did $171 million versus $116 million from the prior year. So nice top line growth. They more than doubled their bottom line. $13 million versus $6 out there. ATHN is the ticker symbol. I believe this is at new all-time highs out here. ATHN. Nice little move with some good, looks like some pretty good volume behind this move out here. Yeah, absolutely. This is all-time highs. In fact, this looks like it's an IPO. Well, it takes us back in, maybe I'll have my data just in September of 2007, but this is a nice little rocket ship. A lot of gaps out here, most certainly. So if this thing ever does fall out of bed, it will be lookout below. But right now, today, you've got volume in this equity here, about 231,000 shares, taking over the most recent highs, January 31st. That had 705,000 shares out there. Let's take a look at something here that we have, and let me see here, moving to the downside. Fairway Groups Limited, FWM, is the ticker symbol out here. So let's go see what in the heck is going on with this equity, other than it's falling apart. FWM, let's go see what it's trading into. So this thing here is trading at $8.44. Boy, you talk about, you get those initial signs of institutional selling out here, and that's a time where you want to say adios, my friends. This thing here had some. Now, this is an IPO that takes you back into April 2013. During that debut session, we saw a low of $16, even Steven, up to a high of $18.41. You're trading at $8.40 right now. That basically means everybody that is in this equity is in a losing position. Not the best of circumstances out there, most certainly. Well, there's maybe a few people that have a little bit of profit, and I can see because we got a little bit of a wick underneath that candle session out here. But you can see you had a nice little sign of strength right out here. Well, there was a sign of strength from a volume standpoint, but a candle standpoint, it most certainly was not. And you're always concerned about those days. At least I'm always concerned about those days where you see volume, but you don't see any price move out here. And I always get concerned when I see price get below that level. And that's what we actually saw take place right here in the trading session of August the 16th. But that wasn't so bad. It consolidated, started making lower highs out here. That was not a good thing. But then you saw the actual selling. Now, I don't know whether it's institutional in this. It's $20 stock. It most certainly could have been. But you just see large selling come into this equity. That was on November 7th. And that was at a price that closed out at, $19.95 is what it closed at. Now, how about those folks there that were wondering, do I sell or do I not sell? Folks, when you see volume come out of an equity, just get out of Dodge. Just protect your assets out there. That's the only thing that you've got. You want to make sure that you can stay inside of this game out here, and that is on Fairway Group Holdings out here. Not the type of golf fairways that you like to hit out here. I'd stay off this fairway altogether. Let's take a look here at, LinkedIn is having some trouble this morning. LNKD is the ticker symbol. Let's go see what kind of volume is coming out of this. It's down. It's trading out at 202.76 out here. It's got some volume behind the move. Where is LinkedIn likely going to trade back to? This thing now is starting to form a little bit of a descending price channel out here. Let's see if we can draw that in. I'm just going to start with, and the way that I really start to begin to draw and identify the touch points, if you're watching us on TigerTV, is I just use a line tool, and I'm using the co-located opens and closes out there. And that just makes it a little bit easier for me to do. So I'd suggest that you do the same. And then I just delete that line afterwards. I just start here with my parallel line tool. Most systems have a parallel line tool as well. It just makes drawing. Oops, I grabbed the wrong thing out there. I didn't do a good job of showing you how to do that. How about that? Trying to teach a lesson out here. And this is Ensign Windows that I'm using. If we take a look at the parallel line tool on this software application, here we go. That's a little bit better. So here is the price channel, at least, that it looks like LinkedIn is beginning to travel within. So we'll use that. Let me go ahead and delete this little blue line out here if I can. Let me just do this. It'll be a little bit easier. Make sure I get rid of the right line out there. There we go. So there's a descending price channel that we've got LinkedIn traveling within. So it looks like there's a little bit of an intersection out here with a little high volume bar that takes you back to May 3rd, right around the 187.75-ish type level out here. It looks like LinkedIn is on its way down to the bottom of that rising price channel, that horizontal area. It's traveling into a swing point, its most recent swing point out here, which was January 7th, 3.7 million shares. And as it's pulled back here this morning, I've done 3 million shares. So, yeah, it's going to bust that swing point. We'll see if it can find some support out here in this descending price channel. And that's what's traveling. And what does that mean? That means actually LinkedIn would be a nice short on a bounce back up to the top of that rising price channel, so long as price is able to be contained within the descending, I said rising price channel, my apology, within the top of the descending price channel, so long as price is able to be maintained in there. Can't tell you why these channel lines work. I just know that they do, and it's worthwhile to go ahead and draw them on your trading system out here. Let's go take a look at Apple. Let's go see what Apple is doing. It's up $8 out there. Of course, let me see what else is going on with some of our core stocks here. So Apple is trading out at a price level of $520.79. That is a gap. Ooh, no kidding. Apple formula. Let me just update the chart here. Let me make sure that this is updated here right now. Refresh maximum. This is interesting. Got a nice little island bottom out here inside of Apple today. This thing had a gap down, big volume, most certainly behind the move. That was January 28th. So the nice thing about this little island out here is now if we see this island, if we see it close below the low of the actual island out here, that'll spell toil, double and trouble, or something like that. As Macbeth would say, you don't want to see Apple get below 493.55 because today it's making that very, very, very bullish pattern. And breaking that would be bad news. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's up 54 points, trading out at 15,681. S&P is up 10 points. And let's take a look at the 30-year Treasury out here. Remember, we got a call last week. Individual was long the TLT out there, and we were taking a look at it. And what we identified here was that there was a pretty good chance that the TLT would run up into the bottom of that long-term consolidation area, and that's where it would begin to back off. And as you take a look, if you're watching this on TigerTV, that's the yellow box. That's the yellow large box that is on my screen. In fact, well, I won't get rid of this because the actual move in the 30-year Treasury is going to take it down to about the 117-ish area. Remember, when you break a consolidation, your move is usually equal to or greater than the consolidation. That's, in essence, what we have that appears to be going on at this moment. Now, and that is because this level of this consolidation, which is, by the way, has been in place since August of 2011, we can see that price broke through that area. But that is a strong area of resistance out here. Each time that the 30-year Treasury has tried to get up there, it has been knocked down. And that got up to, it's the 135 area. You actually got up on February the 4th out here to a high of 135.02. Now, if we take a look at the 30-year Treasury, off of the bottom here, it's been traveling in a rising price channel. While we were at break there, I went ahead and drew this into the chart. Now, we'll know if the move to the upside here is over if we see a break of this rising price channel out here. So you can see here, even this morning after the jobs report, we saw a move down. Now, that price channel, if you this is the continuous contract that we're looking at on the 30-year Treasury. I'm using the touch point. I'm using the open of the January 2nd session out here. That open, by the way, is a 128.03. I'm using as my next touch point here the open of January 6th. That was a 128.08. You can use the close of January 8th. That's at 128.25 out here. You've got your nice three little touch points out here. Interestingly enough, price pinged down and tested the bottom of that rising price channel. So this shorter term trend that we're looking at, is still intact here, but it's got some significant overhead resistance, and that's going to be in that 135 range. That is the bottom of that long term consolidation pattern that it had broken through. If we take a look at natural gas out here. You got natural gas right now. We're looking at the March contract trading out at 487 out here. The back off thus far, if we take a look at the last leg up, well, first it's made 100% move by coming back and testing the January 31st low out here. But if we take a look at retracement so far on this last leg, you're below the 0.382 level. Would suggest that coming back to 462 might be its next course of action out here. That is your 0.618 retracement level. If we take a look at light sweet crude, let's go see what it is doing. It is struggling to get up and over its B point. It's trying again here as we speak right now. It's trading out at 98.25. The B point that is trying to get over to form an A to B equals CD up pattern is January 23rd. That's at a level of 97.84, 252,000 contracts there. So far here today, it has done 78,000. Again, that price level for the A to B equals CD, 97.84. It's going to need some giddy up and go juice. But if it can close above it, look, whether it's on light volume or not, it can still go ahead and complete that A to B equals CD. And that would set up a move. If it does with volume, you're looking at 103.63, 101.83 for sure. Of course, nothing is for sure in this business out here. That's why we use stops. It's why we always use stops. We keep those in place out there. So, folks, it is Fantastic Friday. That means we got the Nadex Bull Bear binary option hour up with our man Daryl Martin and the one and only Tom O'Brien. Folks, thanks so much for joining me today. Have a great weekend. I look forward to seeing you first thing Monday morning. Hey, do yourself a favor. Go to the homepage at TFNN.com. Click on my name. Go check out Mastering Probability. We'll have a blast, and we'll make a lot of money. We'll be right back. See you on Monday, folks. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these three conditions. 1, choose only one pearl. 2, remove one pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.